We're looking at a 600 crore rupee manufacturing facility now in West Bengal. Let's chat with Saurabh Bhudolia, the ED at Lux Industries Limited, joining in on the show right now. Saurabh, great to have you today on ET Now. Tell us a little bit more about this, facility in West Bengal, which is quite a significant production capacity that you've talk about. Help us with the timeline as to when this facility will be operational, and at what level of utilization do you expect it to go at in the first 2 to 3 years?
Thank you. Thanks a lot for taking me on this call and allowing me to share my views. So, like Lux Industries Limited is already having under Vertical A, we are already having a manufacturing facility in Dankuni, which has been penned out in around an area of around 8 lakh square feet, and largely the capacity is completely utilized in the range of 70 to 80%. Then we thought this is the right time when we should go for the expansion. There was a vast area of the land which has been acquired by the Vertical A in last couple of quarters and year, and this is so we can expect around another 12 to 13 lakh square feet of further construction just adjacent to the our existing factory. The current capacity of the existing factory in West Bengal to have the manufacturing capacity of around 14 to 15 crore pieces. This facility will again add around roughly around 70 to 18 crore of further production in number of pieces to the Vertical A of the business. We are expecting that this facility should get completed over a period of 5 to 6 years in two different phases. The initial phase will be operational by the end of 2 to 3 years, and the second phase largely will take another 2 to 3 years. So the entire facility will get covered or will get completed over a period of 5 to 6 years. Definitely, it's a huge investment from the company side. We are putting on table around 600 crore, which comprises land, building, civil work, plant and machinery, and other intangible and tangible costs for the Vertical A.
Saurabh, how do you plan to go commercial on this? Is it going to be in phases, or it will be only after 4 or 5 years that the capacity comes and adds to your existing capacity?
No, no, definitely. So by end of second or by mid of third year, we should be in a position to start the phase one production. And once the phase one is done, immediately the parallel construction will be keep happening for the phase two. And by end of year 6, we are expecting that the entire facility should be put for the operations.
And the 600 crore investment, Saurabh, how do you plan to fund that? Is it going to be internal accruals? Is it going to be debt?
So out of 600, we strategically we are taking a mix of around internal accrual plus borrowings. The initial funding will start from the internal accrual. Again, this funding is to be required over a period of 6 years. So it's not a big burden on the company. Every year, the requirement will be in the range of 50 to 70 crore. Largely towards the end of the year, we are expecting the investment should go up in the range of around 100 to 120 crore per year. So around 300 crore, we are expecting to go for the borrowing. Balance funding should be done through the internal accrual.
Borrowing number currently sits at roughly 600 crore. Correct me if I'm wrong. Okay, if I remove lease liabilities, that's probably 550 crore. You can correct me if I'm wrong, and therefore your borrowing by the end of this capex cycle will be over 1,000 crore in terms of the absolute borrowing number.
So again, we have to see the borrowing number in different vertical wise, because anyway, as you must be aware, the company is going for a restructuring. So under the vertical A, B, and C put together, yeah, definitely the borrowing may be in the similar range as you spoke about. But for the vertical A, the borrowing will be, after taking this borrowing, the total borrowing will be in the range of 500 to 550 crore.
And what is the cost for this borrowing that likely you're going to pay?
So see, again, my existing cost of borrowing is in the range of 6.5 to 7%. Still, we are in the negotiation with the multiple banker. Once we finalize the deal, then we can give back the accurate number for this borrowing, which is required for the expansion.
Okay. And give us a sense, what does this do to your top line? Maybe 3 years from now, in terms of growth, and you suggested that you are at 80% capacity utilization. Any scope to kind of increase that or increase efficiency on your top line? And what does it do in terms of the additional capacity 3 years from now to your top line?
Again, let me take a step back. So since last 8 quarters, if you see, the vertical A is growing in the double digit, around 20-25% quarter on quarter and year to year. We again in the hosiery industry, again, if you are exhausted on the internal capacity, we can always go for the third party manufacturing, where we can control the pricing, we can control the quality, and still have the manufacturing facilities in place. Over a period of next 2 to 3 years, we are expecting that around 3 to 5 crore of the internal manufacturing facilities, 3 to 5 crore of the pieces will go up from the internal manufacturing facilities from this facility. And by end of around 6 years, the entire facilities will go up in the range of around 15 to 17 crore pieces.
Your brand, sorry, the vertical B which you have has a brand licensing agreement, and if I'm not wrong, you've done a deal with Reebok. What does that deal allow you? What kind of scale up you are expecting from there?
So see, again, the company is completely being operated by the different vertical heads. So largely we are focused on the vertical A of the business. So we would be in a more of a comfort position to give the answers only for the vertical A. For vertical B, there is a separate team with whom you can have an interaction, and they would be in the right position to give the picture on the Reebok deal.
And what about the sourcing of raw material? Do you have enough sourcing of raw material and supply chain as you expand your capacity?
Yeah, of course, the raw material and supply chain completely in place. We have a complete long-term relationship with the multiple vendors, multiple supply chain partners. So we are not seeing any kind of challenge in the future as well. Again, these vendors are largely partnered with us since last 20 to 30 years. It's more of a relationship than only a corporate relationship. So we are completely counting on them. The contracts are in place, and we are not seeing any kind of challenge in the coming next few years.
And what is the kind of export opportunity that brings in this capacity expansion?
Yeah, of course, the export will be the another milestone we want to see over a period of time. Still, the export market looks very bright. In last few quarters, as we know, because of the economic, eco-political reason, the export was a bit sluggish. But again, in the coming few quarters, we are seeing export is we are seeing a strong momentum in the export. And for the next few quarters, definitely export will be the another area of growth.
Okay, Saurabh, just give us a sense. Therefore, you'll add maybe another 3 to 4 crore pieces, is what you suggested, right? On the current 12 crore, 3 years from now, could you probably give us a sense as to whether there is enough demand in the market to absorb this kind of production increase that you're going to be doing?
Yeah, of course, as I told you, since last 8 quarters, we are largely growing in the range of 20 to 25%. So as we are sitting today, last year numbers, we have closed around 1350 to 1400 crore, which roughly amounts to 17 to 18 crore of the pieces we have sold in the market. So even if we are expecting a lower double digit growth, of course, 3 to 5 crore of the pieces to be sold over a period of next few years will not be a big challenge.
Do you see the trend for the margins there? Are they going to inch up to close to double digit in the next few quarters?
See, because of this transformation, if you can see the financials in last couple of years, company was completely did a lot of investments towards the marketing and the advertisement. Largely, that phase is being over, and in the next couple of quarters, definitely you will see a huge margin improvement over a period of time.
And could you quantify that, Saurabh?
Sorry, come again?
Could you quantify that number? How will margins go up?
So see, largely in last couple of quarters, around 100 to 120 crore of the marketing investment we have done in the vertical A. As we are seeing, the top line will go up, while advertisement spend largely will remain in this bracket. So definitely it will help to add a value in the range of 100 to 150 basis points towards the bottom line.
Okay, Saurabh, thank you so much for joining us this morning and giving us that perspective. That's, of course, Lux Industries. Stock perked up 2.5% now. We'll see a very short break, come back, talk more. Stay with us.